This program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
And our stock of the day is Helia Group. You may remember it as Genworth, just for those of you playing along at home. Shares are slumping, coming under a lot of pressure as the lender's mortgage insurance provider was advised by the Commonwealth Bank that changes to its existing contract are on the agenda. So it provides this lender's mortgage insurance to Commonwealth Bank, and that contract represented 53% of Helia's gross written premium in 2023. Helia CEO Pauline Johnson said the company welcomes the opportunity to continue and extends its relationship with the CBA. Share price is down by 17%. So I dare say, Michael Wayne from Medallion Financial, that's putting a positive spin on things from the CEO?
It's a good way to put things. It's always scary when you see companies with so much concentration to one party for their revenue. Commonwealth Bank for this business had been already reducing the volumes that they were putting through Helia over time. So perhaps this doesn't come as a complete shock, because the Commonwealth Bank, which is obviously the largest client that they have, insures less of its high LVR loans relative to some other parties. So they had been losing some of Commonwealth Bank's business anyway. But throw into the mix the fact that it is a challenging environment for these kinds of companies. It's very hard to see, gross written premiums taking off anytime soon unless the macroeconomic environment changes and the backdrop shifts to favour first home buyers again. Higher bond yields on one hand is a positive for them. They get higher income on their investments, but as bond yields increase, the face value of those bonds often falls, so that's probably offsetting the positive implications. So there's a bit going on for this business at the moment. So from our standpoint, today's announcement certainly doesn't help what was already a challenging backdrop, so I'll go sell.
Sell, got it, thank you. David Lane from Minnett up in beautiful Brisbane. As Michael said,
Gold Coast today.
You're in the Gold Coast. Well, lucky you. Don't brag. Okay. So, what's going for Helia Group? What's the dividends like? Why would you need to be in it?
Yeah, I probably have a little bit more of a positive view than Michael. From a dividend point of view, they're currently at the current price yielding 8.3% fully franked. So a grossed up yield of over 11%. So from that point of view, it's a positive PE ratio of about 4.6. Down 17.5%. To be honest, I think it may well even be a bit of an overreaction, because it's not surprising that CBA are looking at their contract, because I remember talking about Helia Group on the call probably 6 or 12 months ago, and that was one of the risks that we highlighted, was that CBA's contract was coming up for renewal, and as is often the case with these types of things, they'll put it out to market, they'll put it out to tender. Doesn't mean that Helia Group won't win that business. There is a chance that they may lose that business, and that's obviously what the market's looking at today. But if they were to retain that business, it would be a positive for the stock, and you'd see them as value at the moment. We've currently got a hold on it prior to today's announcement. Potentially with the share price down as much as it is, those who are looking for value may well be enticed by that dividend and by that PE. But as Michael pointed out, they are 53% reliant on CBA. So if you are investing in Helia, you're taking the chance that they retain that contract.
All right, so that is a hold and a sell on our stock of the day, Helia.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.